The Professional Sports Investor's Handbook, a systematic Methodology-2. In the domain of high-frequency sports data, sentiment is the enemy of profit. Success is the result of disciplined algorithmic execution. Advanced analytics, quantifying the sports edge. Moving beyond surface-level statistics, we employ a quantitative framework to isolate market inefficiencies. One expected value EV optimization entry is strictly reserved for positions where EV PWIN times text profit, PLOS times text loss, $0. 2. Stochastic Modeling Poisson Distribution. Utilizing historical scoring distributions to model goal frequency, essential for low-scoring venues like football. 3. Dynamic Strength Mapping. Glicko. Moving beyond stagnant league tables to track evolving performance metrics and momentum clusters. 4. Closing line value CLV mastery. Achieving long-term profitability by consistently securing odds superior to the market's final equilibrium. 5. Weighted home field advantage. Isolating the variance in team performance relative to environmental factors, rather than applying a universal home field bias. 6. Efficiency variance analysis. Using advanced metrics, XG per, to identify statistical mirages, where dominant teams are punished by short-term variance. 7. Performance degradation modeling. Adjusting baseline expectations for fatigue, travel-induced latency, and rotational depth. 8. Contextual motivation weighting. Integrating psychological triggers, relegation pressure, title urgency, rivalry premiums into the predictive model. 9. Personnel impact coefficient. Assigning precise value weights to key roster changes to adjust win probabilities dynamically. 10. Stylistic matchup synergy, analyzing historical tactical correlations, e.g., how high-press defensive structures disrupt low block distribution. 2. Capital allocation and probabilistic structuring. We manage bankrolls with the same discipline as a hedge fund, focusing on preservation and compounding. 11. Kelly criterion optimization. Mathematically sizing bets to maximize logarithmic growth. EIF, Frey CBP, cube. 12. Fixed fractional bankroll management. Limiting exposure to 1–2% of the total capital to eliminate the risk of ruin. 13. Unit-based accounting. Decoupling performance from currency to maintain an objective ROI analysis. 14. Complexity reduction. Avoiding parlays, we focus on high-probability singles or doubles to maximize the mathematical expected value. 15. Contrarian value seeking. Capitalizing on public irrationality by fading oversaturated favorites in favor of high-value underdogs. 16. Strategic hedging. Utilizing mid-game position management to lock in guaranteed profit trajectories. 17. Market-specific alpha draw specialization. Exploiting the market's underestimation of draw probabilities in high-variance football leagues. 18. Total markets focus. Directing capital toward over-under markets, which often reflect cleaner, less noisy data sets. 19. Live market arbitrage. Capitalizing on volatility windows, specifically during major momentum shifts or liquidity gaps. 20. Market diversification. Constructing a portfolio of bet types to mitigate volatility across varied match-day scenarios. 3. Operational discipline and cognitive governance. The most robust strategy fails without the psychological fortitude to execute it under pressure. 21. Iterative logging. Documenting every position's rationale, result, and emotional context to identify and eliminate cognitive bias. 22. The contrarian mandate. Operating with the conviction to fade public consensus when the numbers demand it. 23. Anti-tilt architecture. Strictly enforcing a zero revenge. Betting policy losses are treated as market data, not emotional slights. 24. Niche domain domination. Abandoning the generalist approach to gain deep, information asymmetric advantages in specific leagues. 25. Liquidity and odds tracking. Detecting early signals in global markets that suggest incoming sharp money or unannounced information shifts. 26. Objective ROI. Benchmarking. Replacing big win goals with disciplined, monthly profit target execution. 27. Pricing efficiency assessment. determining if new information is already baked into the current odds before initiating a position. 28. Success. Bias mitigation. Recognizing that streaks occur, avoiding the cognitive error of increasing stake sizes due to temporary variance. 29. Cognitive reset cycles. Implementing scheduled hiatuses to combat mental fatigue and maintain analytical clarity. 30. Algorithmic execution, strictly prohibiting gut-feeling intervention. All positions must conform to the pre-established betting protocol. Executive summary. A sustainable edge is not found in luck, but in the rigorous application of your personal betting protocol. By synthesizing data-driven transparency with disciplined capital management, sports investing is transformed from speculation into a predictable financial process.